Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, January 20th, 2016. I'm starting this video just a hair before noon Eastern Time, just to give a quick overview of what I'm seeing in the markets. This video I will keep relatively brief. We're now at those critical support levels. At least the next, I had a support level here on the SPY that I discussed recently. We sliced through that, and as I mentioned in the last video, the downside from there was only a couple percent. So that's where we're at today. That's about 2.5% lower, and this is the next key support level, as you can see here, just all the way on the left. That's all I can zoom out on this daily chart here. We have a candlestick reaction high there, and then we broke above that. That was a resistance level. Came back tested 1, 2, 3. So I have two lines. I have this reaction low here back in 2014, and that's where we're approaching now. And there's also a reaction low. So that's why I have what I would refer to as a resistance zone, because the top of the resistance comes in around 1822-ish, we'll call it, rounding off, and the bottom is about 1815. So, on a scale of nearly 2,000 points, that's a relatively small zone there. So that's what I'm looking for. Still see some positive divergence on the 60-minute time frames, even though we moved lower today. We haven't negated or taken out those divergences. So I'm referring to just about all the major U.S. indices. So there's the S&P 500. Take a quick look at the Nasdaq 100. The Nasdaq, these are key support levels here, and this is that support zone. Correlates to about, what was it, 98 to 100 or so on the Qs, and we're actually trading just below it. Now, as I often talk about, when we've had these well-defined support and resistance levels and they've been tested many times and we come back to revisit them, one of two things usually happens. We either reverse just shy, and if you recall last Thursday, I went long, expecting a reversal just shy, but I took it out as a day trade. I closed out at the end of the day, and that just so happened within pennies, caught the bottom and highs of that and reversed and kind of sat aside. And at this point, I'm expecting a brief whipsaw overshoot of this support level here, and that's I can't say we've had that yet because we're trading, as you can see, just below it. And let's take a look at the Qs real quick. I may have to flip boards here. Yeah, we're trading quite a bit below it, but I'll tell you what's keeping me leaning towards an expected bounce. Oversold in a market like this. This market was so full of excesses, so much bullishness, margin levels at extremes. So I can easily see, some additional selling if things really. The crap really hits the fan here, but I don't think we're going to get that just yet. If we do, there's the next support down there, and I already covered this on another video, so I'm not going to go into that. That's, as I said, if we make a solid break, especially if we can't regain that level today, going back here on the NDX. I think I had it on this board here. Yeah, we need to regain that 4050, 4052 level. Let's just say 4050 by the end of the day. So that's what I'm expecting, and that would be a bear trap or a false breakdown, which is a very powerful technical event, because if you have shorts piling in here, longs capitulating, then you get a reversal. Those if the market does start to move back up, all the shorts that jumped in late here, the longs that got shaken out, they start to buy back in. And not only that, that's a simplistic view. It's more of the high frequency trading. They flip the switch on the machines when they think it's time to buy, and they start buying, and you'll see it reverse so fast, and then you have the shorts that have to step in and cover. So hopefully we'll get that today. And again, over time I expect more downside, and if we break today's lows by quite a bit, I have several long positions I've taken or added to today, and my stops I'll allow a little bit slight undercut of this morning's lows, and then aggressively start scaling out. But let me dig into why I'm a little bit, even though the Nasdaq looks like it's broken support here, let's take a look at some charts of the top components, because as I always talk about, the Nasdaq is, especially the NDX Nasdaq 100, is very heavily skewed to the top 10, even the top 5 holdings. So here's the biggest by far, Apple, and this is just a very well-defined support level. I put up a static post and even made Apple a long trade idea earlier this morning, and so far so good. I think we went long somewhere around here, so we've come back. Shot up, had an initial leg off the bottom, put a double bottom here. I'm looking at a 1-minute chart. Sorry, folks, I'm trying to talk fast. I've got a lot to do today to manage my positions and get this video out. So so far so good. We came back down and reversed, and now we're moving higher. Obviously, if you're day trading or an active trader, you can see some resistance there. We have that previous reaction high from this morning. There's a reaction high there, a reaction low. So, a break over that 94.85-ish level will take us up. And again, if you're day trading, there's solid target right there. You have a gap, the bottom of this gap right here from the other day, as well as that reaction low. So that is 95.48. And if that was your target as a day trader, if you went long when I posted the trade, or you went long on your own and you want to book partial or full profits as a quick trade, you can do that. But as I posted on the site, my target is up here somewhere around above the $100 level. So that's that. There's Apple at a key support level defined by numerous reactions going back over the last couple of years. Very oversold. Oversold, as I always say, is not a reason in itself to go long. But there's a 60-minute chart. Let's see. I think this one I posted in the trading room today. We have what I call potential divergence, because I'd like to see this MACD curl up and give a bullish crossover. And once that happens, I call that, or I refer to that as confirmed divergence. So right now there is a strong potential positive divergence. RSI making a higher low so far. My 13.3 trend indicators, that's just an EMA pair. Divergence there. Buy signal would be confirmed if this flips to green. But either way, you can see this is sort of a falling wedge type pattern. And even if not, I just marked the bottom here to highlight the divergence. And there's the target for the trade, 150, which is set just below the actual resistance on the chart. And I mentioned there are a couple levels to watch for if you're swing or day trading. If we happen to have a strong reversal, here's a downtrend line you could target, and there's a minor support level at 98.95. Okay, enough on Apple. Let's just go through the rest real quick. Get back to a daily chart. And there's Google. I haven't cleaned these charts up, but you can see this yellow line is a key support level. Look at a lot of reactions off that level. Big gap right there. And now, yes, we are trading below it, but again, what I'm playing here is sort of what I call an overshoot, somewhat speculative trade. Stop's not too far below, but bottom line is, if we don't by the end of the day gain back these levels, then we're probably going to continue to go lower. There's Microsoft at support, and we have this reaction high back here. Microsoft actually has this support zone defined by this reaction high and this reaction high. And we're at the top of that support zone now. So there's, what is that, 3 so far, the top 3 components. I already showed you Google. That's just the other share class. So there's Google at support. Facebook. Yeah, I have a support line here. I've had that one for a while. I would refer to that as moderate support. That's, and the uptrend line is just the midpoint of this ascending price channel that it traded in back here. Amazon broke down. I pointed out this bearish rising wedge pattern recently, as well as this gap, so it took it out. And longer term on all these stocks, I remain bearish, but I'm just looking for a bounce here. I haven't added anything to this chart, but if we look here, we do see quite a few reactions right here. And really, so anywhere around there, we're right at what I would consider a moderate. I wouldn't consider that solid or strong support, nor I would consider it mild. It's decent support. And if that goes, we have some decent support there. But the next key or critical support level is all the way down here around 493. So there's Amazon. And I could go on and on. Intel, I don't see a whole lot. There's a gap there to the left of that. So there's Comcast. And really, I'm already through the top 5 components, and I'll stop here. There's Gilead, big biotech, one of the top components of the Nasdaq 100. Look at all 1, 2, 3, 4, soon to be 5. So that one has a little downside left, but it's coming up on just a solid support level, and we're not far from it now. So that's my plan here, is get long, allow a little bit more downside. We might take out today's lows. Actually, as I'm talking, we haven't done it yet, but we're close to on the Qs. We just took it out on the SPY. And so, I'll plan to start scaling out here soon if we go much lower. There's also a couple other short-term indicators that I'm watching that are not yet, but close to firing some buy signals. So that's my plan. And before we leave here, let's just talk about gold and the miners real quick, because that's the other sector that I'm watching. In the trading room, I've mentioned quite a bit recently how the divergence between the miners and gold and silver. Ultimately the miners follow the metals, and the miners have had a heck of a correction the last few days. Let's just go back to that real quick. GDX. And they broke this key, or what I called critical support level. I did a video on GDX and gold the other day, and in that I mentioned I could see the possibility, and wouldn't be surprised to see this, what I call a washout or a flush out move, break below this support. We've been trading all the way back to, last summer, numerous times. I mean, that is just a super well-defined support level. So many eyes on that. And obviously, once it broke, you could see there was very impulsive selling. Let's go to 1 minute chart. Once that level gave way, what you have are a lot of stops get hit. People who are trading long are logically going to have their stops just below that. And what I like to do as a trader, I anticipate which breakouts are likely to stick, so which ones I want to position for in the direction of the breakout, and which ones are likely to prove to be whipsaw or false sell signals, because as I often say, fewer things are more powerful in trading than a false breakout, because as I mentioned earlier, everybody has to swing back to the other side. The shorts have piled into GDX on this break. Once they see that level regained, will cover. Longs, once they see that it held, that we're waiting to step in, we'll step in at that point. And more importantly, the high frequency trading will take over. They're vultures essentially. So that's their job, is to if they see a short squeeze coming, they're going to get in front of it and add to it. So that's when you have those real sharp snapback moves. If we get it, and there's work to be done. We're at 1254. So that the GDX has to rise nearly 50 cents. Not a big move for a stock like them. Any other ETF, that would be considered a huge move in one day, but GDX can do that in a blink of an eye. So just keep an eye on that. And again, so here's that sharp move down. We're at a daily chart in GDX recently, yet gold, as we can see, has held up very well. And as I've been pointing out, that's one level here, the white line, the 105.50 level, which we've just recently taken out. But this orange line is the key level. Once we take that out, we've taken out that previous reaction high from back here. Was that not just earlier this month? And that would be bullish for gold. So again, but the metal's holding up. The miners will ultimately follow. Gold, however, is not out of the woods yet, and neither is silver. This is a silver ETF on a daily chart. We have this triangle pattern here, and this thing can break either way. So an upside resolution, upside break of that pattern would certainly be bullish. And then beyond that, to keep the bullish case intact or to add to it would be for silver to take out this reaction high from back here, while a downside break would be bearish. So gold and silver remain in a very precarious technical position. They're pinched between some pretty key support and resistance levels and can go either way. But I still think the long-term charts, they're setting up for a bullish move. We need that, the price evidence to confirm it here. So if the metals break out and break to the upside here, like I said, GDX could play a violent game of catch-up, and that's what I'm looking for. Like I said, work to be done, but those are the things I'm watching right now in the market. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.